What's going on, guys? Get started in a minute. Good morning. Good morning. Hopefully everyone's doing well. I changed the intro screen. So I got a couple different intros that I'll be using to keep it fresh. The horse intro was that was created around Halloween. So I have to have my designer create something new that I guess it's a little late to be festive, but not sure if we're going to go with the zombie horse as an intro moving forward. All right, let's get started. Excuse me. Coffee dries my throat out. All right. Good morning. Good evening. If you're in Asia, good afternoon. If you're in London, it is 8 a.m. New York time. And welcome to the stream. So I've been doing these now for the last, since Monday. I'm going to do them moving forward. So from 8 a.m. to 9 a.m., I'll be on YouTube streaming live. It'll be short, right? So we could finish before 9 a.m., but the last couple have gone that far. All it is ultimately me just providing what my game plan is for the day. Looking over what might be worth paying attention to. If we have anything that possibly will be driving price for the day. For example, you could see the economic calendar that I have open right now. If it's Monday, we're probably going to be unpacking what has happened over the weekend. So from Friday close to Sunday futures open. But going to keep it pretty simple. So plan for the day, just some thoughts, wrap it up pretty quickly, and if I have time, take questions. But I do want to have that 30-minute break before the market actually opens at 9:30. If you're not subscribed, hit the subscribe button, hit the like button. I appreciate all that. Channel has been growing again. You have to be consistent with YouTube, which makes sense, right? Remember, none of this is financial advice, strictly for entertainment purposes only. Be sure to check out my partners at Phemex. So Phemex has brought on a few well-known people in the crypto space as of the last week and a half. So we had Cold-Blooded Chiller that came on about a month ago. And then as of the last week and a half, we have Ponzi Trader, we have Crypto ISO, and Captain Cole, so Zoran Cole. So that's exciting to build this team out. If you're interested in trading no KYC perps and spot, the perps market is notably thicker than the spot market, but that's pretty much how things are across the board. Check out the link below. So Trade Phemex is that is my link that takes you to the exchange and gets you access to that bonus, which should be doubling in a week. So I think the bonus right now is like 4K, and I think it's probably going to go up to around 8K, and then they'll roll out a bunch of other promotions as well. Let's get started. I don't think I have to do a sound check because I haven't had a sound issue in a long time, so it's just a force of habit that I do. So today, nothing really that's notable until around 10 a.m., and that is consumer confidence and existing home sales. I mean, unless you're focusing on Canada's CPI, that is at 8:30, so we'll see if the market actually responds to that. But there isn't really anything that stands out today. Tomorrow we have GDP, unemployment claims, and then Friday we have a bunch of other notable economic calendar events. So it's been kind of light since FOMC with respect to the economic calendar, but I went over this yesterday, so I don't want to just rehash the entire thing. Bank of Japan increasing that outer band for yield curve control from 0.25 to 0.5, so 100% increase, which is a very significant change. And that obviously will have ripples throughout all markets that might not necessarily be seen immediately, although the markets responded immediately. So that is something to keep an eye on, because that is sort of a watershed moment in markets. But if you are interested in understanding what I'm even talking about, I don't want to waste time in this stream. Just go back and watch the first 15 minutes of yesterday's stream, and that should bring you up to speed. If you're on Twitter, I mean, you could just search it, and you'll find plenty of people that are more intelligent than I am with respect to macro, and that's not that difficult. Yeah, you had a bunch of people breaking it down yesterday with different opinions and outlooks, but it is, again, I'd say a watershed moment for markets, and specifically Japan's markets. Short story, I mean, it makes Japanese assets, the yen, that much more attractive, and for the longest time, it was the case that they were definitely not attractive. Now they're actually offering some kind of yield, so that is notable. It doesn't mean that they raised rates, but they did, again, increase sort of the threshold to which, or rather the threshold that they would normally get involved in with yield curve control. So let's take a look at BTC real quick. Just looking at the TPO, just some thoughts. During yesterday's stream, we talked about how we are very balanced. The larger move ahead of us to the upside would be from acceptance above. This was outside of the last 3-day composite. You could expect friction up to 17, but the move would probably speed up from 17 up to this POC. Notably, this low volume area of unchallenged positioning, and more than likely, if the market accepted into that, we would see a pretty quick move. So far, it's been a grind. So, the idea would be, or rather, I went over this yesterday. The idea was that a setup like this, some kind of breakdown like this, that completely reverses it and treats the top side of the structure as support is very bullish. As far as reversal goes, that's the strongest form of reversal for something that like this locally, right? So a consolidation, a breakdown, and then the complete reversal treating the top side as support, whereas the opposite case, a reversal that maybe would be perceived as less strong would be something like this, where you're just reaccepting into the range, right? The lower portion of the range. I mean, it's kind of tautological, right? It's obvious that if you're at the top side of the structure faster, then things are more bullish, right? Price is snappier and it's holding a higher level support. That's kind of, that's like saying that, it's bullish if price holds 25K. Well, it's obvious because right now we're trading at 16, and if we're moving that much higher and holding higher, then clearly it's doing a better job. But anyway, one thing that I pointed out was that this kind of setup, so a setup where you have a breakdown, you leave a gap, consolidate, have this snap and reversal, and hold the top side as support. This is much more bullish when we've come a long way down and there is nothing above us, right? And we aren't into any kind of significant resistance. I drew the example of if the market had been trending up and left much larger gaps, right? And then we have one of those snappy reversals right here where you have, brief consolidation, sort of under over. This would be bullish, right? Because you have kind of a area of really no congestion, no two-way trade. And if the market reaccepts into that region, you would expect that it would be covered pretty quickly. Our situation right now is we're congested and rotating and ranging for a long time. The market's done this, put in that kind of reversal underneath a major resistance. So it's not like it, and just to give you some color, it's not the same situation, right? This is a multi-week composite. You would expect that in this situation to be a bit stickier. This was a imbalance move down, but it wasn't exactly like this air pocket or a gap, like on the way up, or rather on the way down. You can see we create a little bit of structure. And normally, if you were looking at an area and assuming that it was a gap, or rather going to treat it like a gap, you'd have to see that there was really no two-way trade. So as I said, this would be, we're looking for acceptance above here, right? It looks like we've had some brief signs, or rather it was these highs initially, thinking of these were the 2 sessions, and the stream was right here. Acceptance above this, looking at potentially reaccepting back within a prior composite. So, we have from 16.8 right up to 17.2 as an area where price carved out previously, and accepting back into ranges you'd normally expect price to continue to display sort of the same behavior that it was prior. But you don't want to see something, in my opinion, this is spending a lot of time in this region and it's battling this resistance. And it looks like derivatives are a little bit more aggressive than, what we would want to see in the spot market. And just not getting along as quickly. But if this continues to drift up, right? So I think the positive drift is important. If this continues to drift up and we sort of maintain this, we'll say, little trend line of ascent that we're forming, if we get something like this and then we're starting to trade back above these local highs, well, then I think that you could be looking at something that is, begins to pick up speed, right? Because we're kind of, we're talking about breaking out of this local composite, right? That local range, treating it as support, accepting above that, and then squeezing further up. But we are dealing with this little bit of friction right here. But if price continues to press into this level, and that is the resistance that we're kind of leaning on, then that is not something normally you would want to fade, right? You would not want to fade something that was being grinded against. You'd rather see that, it did its job with this kind of rejection and that we continue to drift lower. I think that it's kind of in that, it's at least displaying what looks like some kind of rate of ascent that you can lean on. And I mean lean on meaning make a decision around, such that if we continue to move sideways and then you start breaking below this line and breaking below any kind of local lows, I think that the move is in. And I mentioned on Twitter this morning, the move is in, meaning that this is done and that we start getting that rotation back lower, because this was an imbalance move up. It was a lot of shorts being squeezed. I think that we're due for more chop. Again, I expected that if this was going to be bullish and we're going to get the full move up to this level, that we would have it occur sooner than later. So time is important, in my opinion, to some degree, right? You want to see that if an opportunity is good to take advantage of, that it doesn't give you a lot of time to do it, right? Sort of like, something going on sale at the store. If it's valuable, people are going to come and yank it off the shelves. But what else was I going to say? I'm just kind of riffing right now. What else? Today's pretty neutral, so we'll look at today's profile in a second. Oh, one thing that I wanted to point out. Let's see, days of the week. These are our Wednesday. This is our Tuesday and Wednesday, so we'll add Monday here. All right, one thing I mentioned is that Wednesday seems to be the cap for whatever is occurring in the beginning of the week. So if you have a trend or any kind of drift in one direction from Monday to Wednesday, it seems to be the case that as of recently, that Wednesday session end is the peak of that movement. This is a little bit lower, but the point is, does price have any drift right now? It's sideways, but from Monday to current session hour right now, obviously we have some time left in the day. We have specifically 10 hours left in the day. If you were to look at this, from the open to today, we've been floating somewhat higher. It's not like it's standing out, but the implication of that is that Wednesdays have capped off the move, right? And Thursday and Friday into Friday, we get some type of reversal. And I mean, it doesn't confirm, but it supports my belief that this is not the most bullish response that we want to see for this kind of reversal, that we are at resistance and that we are looking at potentially some kind of rotation lower. That idea for me is off the table. Just go to profile. So one, we have a complete, so if this finished out right now, we'd have an inside day setup, right? If we, so you can't see the axis of the chart. I don't think it's that necessary, but if this finished out right now, we would have an inside day. So you have 10 hours to form an inside day. Not that hard when you have a prior day that had a much larger range, right? And we are extremely tight right now. Almost 2x, almost 2x the ATR of today. So big move yesterday, that's obvious. But we are completely within value of the prior day. So we went from value overlap, balance, breakdown, and then back to extremely tight balance. So this kind of setup, right? If you finish inside day and inside value, I mean, that is probably the highest probability inside day break you could take. So just hypothetically, if we were to finish this session out like this, or even remotely like this, I mean, you have inside value at this point, so I don't think that's going to change much unless the day really begins to rip. But if you finish out like that, it's a really easy setup, in my opinion, with a break of the high or break of the low to one. The first target would be, so you're looking at that. All right, so immediate target to the upside would be from like 16.92 up to 17,050. Excuse me, I'm kind of having like little hiccups under the mic. That is sort of the textbook setup, right? So inside day break, after this day forms, if you accept above, this current day's high, you're looking at playing towards the prior extreme. I think that obviously, as I just mentioned, like if this is continuing to grind up and we're breaking above today's high, then maybe we are going to get the full extent of that move, right? So maybe we get the extent of that move up to 17.2. I would position for that. So imagine that today ends up closing out. Here's our high, and then we're trading above that during tomorrow's session. Buyers are starting to lift this, and prices continually drifting higher. I wouldn't just take the textbook setup to this high, if that's 100 points. I would expect this to have the follow through up to, what is back here, these single prints, and cover that gap more or less up to 17.2. In the case of a break to the downside, which I'm leaning on that more, not extremely, it's not the highest conviction, but I am expecting a drift lower. The break of the low, right? Break outside of value, very balanced day, leading to, more than likely an imbalanced move, especially with this amount of balance over the last few days. This is not a balanced day, but you had balance, breakout, and then we have balance again. The full extent of this move would be down to yesterday's low. So break outside of today's range, holding outside of that, usually you would expect to move all the way down to the prior extreme. In this case would be, again, that's around like 16.4. Normally, I had lines on here a second ago because normally you would look at singles like this. So these single print gaps as areas to get involved or potential turning points for price, on the assumption that these ledges usually offer some kind of response. I mean, if this was a short squeeze up, you look at these levels, these gaps, these imbalanced portions of this profile as areas where certain short stops were blown out. And because you could expect that, some people were stopped out, you might also assume that, people are stopped out. You saw open interest drop. That there are possibly still some shorts that are holding underwater. So when you approach these gaps, right here and right here, that is often an area you might see response if you're approaching from the top side, because any short that is underwater that wasn't taken out from a stop and that was holding through this level where stops were blown out would probably be looking to get out at break even. So you often get some kind of response at those extremes. So at the extreme of the single print right there and right there. If you just continue to accept within this region and there's no response, then you more than often just fill it out, right, without much trouble. So what you're looking at is in a normal situation, and I'll clarify what I mean, you would want to see a snappy response right at this level. So, price might dip in and rip out, right? You don't want to see that price kind of is able to hang out like it's hanging out right now in an area where value hadn't been previously established, right? Because then at that point you should just step out of the way, and it's more than likely going to fill out that low volume region. If you look at the volume profile, you can see there's really nothing there. So that would normally be the case, but we've already had a bunch of effort off of these lows. So short squeeze, snappy excess down here. You don't want to test this out multiple times, right? Normally these singles, so normally I would be considering that, hey, maybe, for example, if we broke out of here, I want to take profit here. Normally those singles would be useful if the market is trending up, right? And then you're left with a profile that has those single print gaps, and you're looking to get involved in the trend, right? Price is ranging. Let's say here where one of those singles are, and this is the area where you want to get involved in the trend and see price really snap up. In this case, it's like we're folding back into an area where, the reason we left it was because of a short squeeze. It's not the most organic buying, right? It was forced covering. And you have a very balanced situation today. Looks like somewhat of a rejection at, again, a key resistance. So I would just, tying this all in, I would play this to the full extent. All right, so I would expect this to take out these lows and to travel back down to this excess. So because I kind of talk in circles sometimes, normally I would consider this as an area to potentially look for a reversal or take profit. But in this case, I don't think that this really does anything. I think this ends up being an area that price moves through pretty rapidly. All right. So we're very balanced right now. The extremes of today, right around 16.92 and 16.755. So look for signs of acceptance through there, because it's probably going to lead to a significant amount of continuation beyond just yesterday's extremes. You got a big pickup in open interest. If we look at Binance, so this is just Binance. You can see that open interest is drifting higher. Price is not really doing anything. So there are people that are getting in position right here with really no real, let's say, for no real results. One sec. I know some of you guys like light mode, but I'm not really a fan. So for this portion of the structure, just want to make this a little bit easier to see. So we're going back here, and you're looking at right around here. So price relatively flat. Meanwhile, open interest up, threefold that. If we're going to say that this is, even if it was a 1% move within this range, open interest is beginning to just move with a lot more conviction. Or rather, just people are getting in position with conviction, and again, not really showing much for it. Notably, funding is positive and has gone more positive throughout the structure, so it's reasonable to assume that there's a good amount of derivative activity on the long side. Looking at CVDs, Binance selling, spot selling, and Binance selling, Coinbase selling, and looks like futures CVD, so stablecoin margin CVD, is more or less following and tracking price. If you look at Binance versus Bybit and OKX within here and Huobi, then you're going to see that Bybit looks like it shorted a little bit aggressively early, was squeezed out. Binance, we'll just, rather than go from memory, I'll just show you what I mean. So here is Bybit CVD. So making a lower low and price kind of tracking. That's from here to here. And then Binance, more or less tracking price. Making a slightly, I don't even know if I would say that actually. Yeah, it is actually. All right. So We're looking at, I mean, it's marginal, but it confirms what we're seeing in the funding rate as well. So price is making a marginally lower high right here. And then if we look at CVD, you have something that is not tracking price. It's making a slightly higher high. And again, that's as the Binance spot CVD sells off. Not sells off, but moving in the opposite direction. Though you could make a case for that, meaning that there's absorption to the downside. Either way, looking at the futures market, which is going to be responsible for the open interest, it appears to be that you have some longs coming into the market. And again, if there's a good amount of longs coming in, and to the tune of, let's see, that is about 6K BTC, you know, you do the math. We'll just convert that to USD so you'll see, because in this case, price hasn't moved. So if you convert it to USD, it's not going to be misleading. You know, 3.9 to 3.49. So about 100, and it looks like actually from the low, about 110, 120 million in longs added through the course of this structure, again, for really nothing. So, I mean, if you see a good amount of buying come into the market, you want to see the market's responding, right, by moving higher. So this is just implying that there is a good amount of absorption. And again, price has kind of lost any sign of momentum. But I wouldn't say that there was really any sign of momentum, because this was mostly a short squeeze. Hopefully that makes sense. Time is it's 8:27. There's a couple other things that let's see before we get into the ES. So funding positive, open interest up. So just to clarify and wrap up BTC, I think this is probably going to roll. So more than likely we get some kind of roll. It's very balanced right now. So I will respect a break in either direction. Again, this is the hourly chart. This is yesterday's high, yesterday's low. I will respect a break in either direction. So I'll just throw the profile on here. If we end up like I said, start drifting higher, start retaking these local levels, then I think we could get the full extent of the move up to 17.2. So I would look to get behind that. This is an area that I'm not extrapolating beyond, though. So if we do get a move up to 17.2, I'll probably look for the fade. And I think that probably puts us somewhere outside of ATR as well. Yeah. So at this point, if we do get a move up to 17.2 and it's within today's session, I'd probably reflexively look for some kind of fade there. You know, covering the gap more or less expected. Price already struggling down here, though. If you do get a squeeze up there, you know, you're probably going to look at some kind of move back down to at least the mid portion of this range again, and potentially to retest the top side of this structure. If we end up rotating lower, if this starts drifting lower and we, you know, kind of break what has been the, I guess, rate of ascent of this little local structure, I think that's probably enough. So some kind of move below one of these local pivots. There shouldn't be much standing in the way if we end up accepting back. You know, if we start trading back below today's lows, there shouldn't be much in the way all the way down to 16.6, 16.5 region. You know, if you look at, this was our snappy response outside of that zone. So we had sort of this fake out lower followed by a ripper up. There's no real reason to retest areas where you've had that kind of significant response. And it kind of, you know, it's the same line of reasoning that I mentioned during yesterday's stream where, hey, if we're back up above 17.5, you know, I'm not going to assume that this is going to do its job again, right? That we're going to have the same rejection. I would just say, all right, if we're back above 17.5, then yeah, we're looking at a much larger move. Again, there's some significant levels that we still have to deal with. We have 18.5, 18.4 region, high time frame market structure on the weekly, sort of right around that level as well. But 17.5 is, you know, it's a ways away from here. So if we get that break, 16.5, 16.5, right? It's the lows of this structure. I wouldn't just write that away, right? So I wouldn't just say, oh, we're gonna start trading back down to these lows. But I think that's where you should start paying attention. So if we broke below today's lows, 16.76 region, trade right down to 16.5 more than likely. Top side of this prior composite. That is also, so that is a daily level right there that has not been retested. So that is around 16.2. Or no, that is, excuse me, that was retested, excuse me. But I wouldn't just write that off. If we start trading below 16.5, excuse me, I keep saying 16.5. It's right around 16.592. If we start trading below here, you know, that's from a like almost a, what was that? It's like a 4-day composite. So if we start trading below there, you know, same logic as any other range or composite we reaccept within, then I would start immediately looking towards the lows. I guess, wait, I'm drawing that, and it's not even that. I mean, at that point, it's not much of a trade. It's from 16.592 down to 16.4. So, hey, I guess I'm not used to these really low intervals. I mean, price is only moving a half-hour range is $30 to $40. So I guess that's not bad. That's 3x that. And at lower prices, you know, that dollar amount is a higher percentage either way. It just, everything seems it's so tight and so small right now. But it doesn't mean it's not necessarily worth it. I mean, if you're looking at 16, let's say 16.6 down to, you know, 16.4 region, that's 1%. You know, so if you're scalping and if you're trading intraday, that's not bad. I mean, big picture, this, as I said yesterday, I think that this probably, let me take some of these off because it's a little messy looking. Apologies for that. So that's our yearly, excuse me, wait one sec. I want the quarterly on. So same as, similar to, actually it's not because we were actually above quarterly VWAP in the S&P. So excuse me, I was going to try to draw a similarity between both. Let me get back to it. Yesterday I mentioned that either way, I think that this kind of move, I mean, this is a make or break region, right? So if we don't continue to rotate higher now, and if we're unable to do that, I think the path is pretty clear back down to these lows ultimately. So I'm kind of identifying what might be an intraday opportunity, but if we end up breaking, or intraday opportunities, if we end up breaking and start accepting through this low again, and there's no response, like let's say, just to, I guess, be a little bit more clear, if we break below, let's say we do break below 16.4, right? So we break below 16.4 and I'm short, you know, there's no immediate response there. Because again, this area could go either way. We could snap down here, have a response, and then get that rotation higher, because I think we're due for a little bit more chop in this region. So I drew that image yesterday of us coming down here, coming back up, and then chopping within here. I think that ultimately this is going to form, though, a brief period of chop before ultimately rotating lower. So let's say we rotate lower, pop back up, then I think you're kind of left with something that ultimately takes you down here. But if we end up breaking below 16.4, so that's down here, excuse me. If we break below 16.4 and you don't see that response, and you're short from, let's say, 16.6, right? You didn't go long here because, you know, let's say that there was no response there. You're taking that little breakdown scalp. If there's no response at 16.4, then maybe you're looking at a much larger move in the short term, right? Because I do think that ultimately this kind of failure at that range high sets us back up towards an extreme. So this is mid-range right now. So there's a good amount of liquidity here. There's, you would expect congestion here, more or less creating a much larger area of balance. But the failure here it's not likely just going to take you down to 16.2, right? Big picture wise. So I'm not talking about just intraday, like we're talking about intraday levels, but big picture wise, I think ultimately continued failures in this region set you up to revisit these lows. So there's always a lot of back and forth about positioning around mid-range because it can honestly it can go either way, right? I mean, the part that makes getting involved at mid-range, not attractive is that at extremes you could more attractively define your risk, right? Through an extreme, at a major high, at a major low. When you're at mid-range, there's a lot of chop. There's a lot of activity that looks like it could go one way or the other. Both sides committing, not the clearest order flow. And it's tempting to get in position because there's always a good amount of liquidity too, compared to the extremes. So, all right. Let's take a look at the ES. So big picture wise still, I think that this is the, for bulls, they need to reclaim 39.30, 39.50 region to get back within this, prior range, right? So between 39.3, a daily close through that level, all the way up to right around 40.96. So underneath this, I think that it's still sort of sell the rally mode. You pretty much covered the gap created on the way up before we started holding this level. So we have some kind of response down here, but nothing that would really warrant any kind of major buy the dip mode for any longer term swing position. Longer term for me, meaning like a matter of weeks or days. Couple things. Yesterday I talked about wait one sec. I have I'll go to this first. Yesterday during the stream we talked about a potential reversal followed by chop because it looked like there was a little bit less interest in selling these lows than the last 3 days. So we had just notable difference in contract values or delta at the lows, right, from Friday to Monday, and then to yesterday. So if you look at, Monday's lows compared to yesterday's lows, it's pretty obvious there's a considerable difference. 1300, 369, 6, 4, 6 in the hundreds. And then you're looking at in that sort of same window, you don't even have over, it looks like just over 500 500. This is delta, so this is not total contracts. So less aggressiveness towards these lows, and it makes sense because you kind of covered what would be reasonable to expect price to move, or a distance that it would be reasonable to expect price to move into prior singles, and into, basically the extreme of the gap that was created on the way up. So you more or less filled out that void. No real reason to get that aggressive selling. At that point, you're at a region where you would expect at least some mean reversion. So we rotated higher, and the level that we were talking about during yesterday's stream was one. There was a little bit of confluence between a prior. Excuse me. So this is, why is my drawing tool stuck now? Hold on. There we go. This level right here. All right, so there's a light line on the chart, so I just want to put the red on it. is the value area low of a 2-day composite. And then here's the POC. That's not so my drawing's terrible. I was about to make an O, but then it looked disgusting. That is a TPO POC. The volume POC was at that value area low. So what I mentioned during yesterday's stream was there's a good amount of confluence at this region along with a poor high that if we were gain acceptance within here, we'd start looking at that POC and ultimately the value area high of the entire structure. So we have accepted within there, right? So we're spending, a good amount of time filling out half of that. So half of this. And it's just not the strongest price action. That's the best way I could put it. It seems like the market's probably long overnight. Not the most convincing price action. We do have a little bit. It's kind of the same thing as BTC, right? We accepted back into an area where you would normally want to see prices move pretty quickly. So let me go back to trading view. So this region, we had poor highs yesterday. We had that value area low here of that composite. And it's not as zippy as I would want. The price action looks a little bit weak, and we're kind of failing just before that naked POC that's up here and right around mid-range. So it's entirely likely that this is just a lower high in the making locally. We're back above the weekly open now, so that's good. So we have we're green on the weekly again. But it's not as convincing as I would want to see. Sorry, this gets all fucked up when you scale it or try to scale it with some of the indicators on. Yesterday's high and yesterday's low. Overnight high, we're back above the overnight high. So this is technically still, pre-market right now. But again, not the most convincing price action. I think that bulls, as long as they hold 38.50, it's not something I would just I would never just blindly sell, but they're still holding 38.50. So that's this little pivot right here. That's back within this composite. So maybe this ends up taking its time, but I would rather see some kind of rotation back there to get involved again. So if we're able to come back to 38.50, treat that as support. Otherwise, there's no real reason for me to get long here. I mean, maybe just looking at a day of scalps. There is a gap right now. So S&P closed at 38.21. So we're a good 60 points above that. So maybe that sets up the morning fade. So if we have some kind of spike after the open, say we open at, 45 minutes from now, spike above the overnight high, pre-market session, and then we have that gap, maybe start trading in the direction of that gap closing. Just be mindful, though, it's the end of the year. There are not nearly the amount of participants right now. There's no one that's looking to really get aggressive. People are kind of wrapping up their books, maybe putting on some window dressing, but I expect it's kind of going to be, it's the 21st now. So if we were going to have a Santa rally, a holiday rally, this is probably it. Yields down quite a lot this morning. Dollar down. What are these alts doing? I think I'm just going to take Solana off my watch list again. I still think that LTC is coming lower. Yeah, I think I mentioned this yesterday. It's interesting because this kind of looks like this, right? If you're just going off price action, if you're just completely forgetting the context between these situations. This is 2020, right before the bull market starts ripping. But there is some notable similarity between them. I think that obviously context is way more important. This is probably going to bounce a little bit more. You have that gap, so it would be reasonable for us to bounce a little bit more maybe, and then I would honestly look to short some kind of breakdown if we move up slightly, or if we end up just accepting below this 633 level again. LTC, so Litecoin, I think there's still a good amount of positioning that's someone is hanging on to from 62. So if you look at open interest, so the beginning of this move, that's right around 61.75, excuse me. Okay. And then we tag that for open interest. Right, we're still pretty off the floor with that. So in terms of USD, you still have a pretty significant position, about 40, 50 million contracts. And the point is that above that, they're still good, right? They still can kind of hold on to hope. But it's very unlikely that their invalidation isn't somewhere just slightly lower. So we didn't really test it that much. We just closed that gap. But, I mean, it's more than likely that if we do re-break this low and start pressing it again, that you start seeing the full extent of that puke. Because, I mean, it's older now, so it's going back to the 22nd of November. So it's, again, order flow gets kind of stale. But if this is some kind of longer-term swing position, you'd have to imagine that a good amount of that might be isolated still to one person. And I don't think that we're in an environment right now that really it makes sense to hold derivative products long when they're going, when position goes against you, it's never good to really hold it for that long, right? But in a bull market, you always get saved. You don't always get saved. It's easy to say in hindsight, but in a bull market, when conditions are completely different, you have a lot more confidence that if the market goes against you, that it'll come back to your entry at some point. And listen, a lot of people, the entire bull market gets saved that way, and that's how they're able to trade on high leverage, because it was a rewarding market. It went against you, but if you just kind of forgot about things for a couple of days, everything was still continuously showing, a tremendous amount of strength. So you were saved. And in this case, I don't think you want to hold positions that go against you, because there's no definite that we have made a bottom or anything like that, especially with alts. I only want to buy alts really when BTC has already shown signs of strength and ETH have shown signs of strength. Why the fuck is this scaling like that? Oh. And then you get that wealth effect back to alts. So metal was the one that I was talking about yesterday when I was talking about price change and open interest and how they're easy shorts. Never sell what looks like the first failure, though, or first consolidation, meaning a move up like this was up like 20%, and I don't remember how much open interest had increased. It was like threefold that. What I said was, don't sell the first consolidation that looks like it's going to roll over. It's almost never going to just roll over, right? More often than not, what looks like it's going to roll over. This is an environment it's not a bull market, so you get a big spike up. Everyone wants to sell this. Consolidates, looks like it's going to roll. People sell early. They get squeezed, and then you get some kind of larger failure. So if you see something like this, if you're filtering for alts, for example, if you're on something like Coinalyze or any other aggregator, and you see you're filtering for change in OI versus change in price. So Helium is a good example right now. Look at that, 101 increase in open interest, so 2x in open interest, and right now it's at, let's take a look at this actually, HNT. So this is probably going to be a perfect example. I mean, good timing, right? Is this going to start its own bull market right now? No. This is just bouncing on the way down. Where is it bouncing? This is bouncing at an area that you would expect to bounce from. So one thing I've mentioned many times before, it hasn't been as important to continue to mention it because we've been well beyond that now for many alts. After these large failures, coming back down to high time frame market structure at the beginning of the trend, so weekly levels, monthly level, daily level, the first major area of congestion on the chart, coming back down there, it's almost always you're guaranteed some kind of response. So whether or not you're looking for some kind of scalp opportunity in longs, or if you're just looking for a reason to close out your shorts, high time frame market structure in an alt especially, you're going to see some kind of response, even if it's just stale orders. So now this is one that I would actually focus on. So for example, this is not something you want to blindly short right now. Can you get away with it? Is it something that maybe it just took these highs and it's going to rotate lower now and it's going to drop 50% today? Possibly, but I think everyone has the same idea early on. I would rather see that this ends up doing something similar to metal. So just to keep in mind how much metal moved up over the course of these hours. And this is the first big move beyond ATR, but I would want to see some kind of development. So you don't even have any kind of red on the 15. You don't even have any, likely any red on the 5 minute or 3 minute. So you want to see some kind of development. I ultimately would want to see a brief period of consolidation. So let's say that this is the high right here and it ends up doing that. So we end up consolidating. Maybe it looks like it gives you the first failure. You consolidate, it starts trading into this range. Then you're going to get all those breakdown shorters, right, that are thinking that, yeah, this is definitely going to close this, because it will. I almost guarantee that this is going to close this gap. But putting a position around that is the difficult part, because does it close that gap after it moves up another 50%? I mean, another 50% from here, it's much higher, but let's see. Yeah, I was thinking it was going to be much closer, but math is math, right? Either way, I mean, if you're short and the market goes against 20%, you're fucked, right? So just knowing that this is going to come down because it's a bear market bounce, right, is not enough. So some kind of consolidation that forms, best case, snaps down, has that squeeze up, and then you get one of those kind of, very thin, farty kind of moves, right? Where you have that follow through. And then an engulfing like this is obviously, that's probably one of the strongest signs. When you've completely done away with the last few bars where the price action in one swift move, and then not much volume. Then I would start looking for shorts. What is up with that chart? Yeah, wait a second. There we go. So I don't know what's up with that. Why this is pumping. Maybe it's on some news. But look at this, right? Let's take a look at metal. Sort of the same pattern. Okay. So metal, big move up, big increase in open interest, right? Good amount of that is shorting though. I mean, if you look at, so this is future CVD moving up, right? But funding is going more negative. So what that means is that someone is still very reflexively shorting this, even though there's aggressive buying on the futures market. There's still somehow not somehow. I mean, there's more friction in the derivative market still in the offer that it's trading below the spot price. Okay, and there's going to be more activity in the perps than there is in spot period across the board. Derivative products are thicker, but you know, you have that big increase in open interest. Market moves down, a little pullback, another pickup, longs get swiped again, another pickup, right? You're probably going to start seeing some open interest start coming in on the short side now that I wouldn't anticipate to get squeezed. It would probably just, you'd see a big wipe from longs that are still in position. This resets, funding starting to go positive. So this is probably gassed, but we're looking at HNT and we're not even there yet. And oddly enough, I don't know what this is. I think you have more support here from the spot market. So I don't know what's going on, but if you look at, you know, spot CVDs versus perp CVDs here, and then you look at HNT, this is not something you're going to look to fade right now. But I think that covers it, guys. I'm probably going to wrap it up. So if, I think I said this earlier, if BTC goes back to 17.2, I probably would look for the fade, at least in the short term. So 17.2 puts us, we're above our ATR at that point. So meaning we're above what would be a normal range of expected movement for price. If it's vertical into that level, I'm probably going to look for the fade. This was already weak. If you get that kind of second squeeze out of this, so big squeeze here, second squeeze out of that, it's back into a prior range high, you know, that acted as support previously on the way down. I would probably look for the short at that point. I think the only place where I'm really looking for an aggressive long would be if we're back above 17.5, because I just don't, I don't think that you're going to see that the market's going to come up here again for the second time and have a second large, you know, high time frame failure. I think that at this point, 17.5, you know, you're trading back to the underside of this structure up. You know, you're looking at least $1,000 move up there, right? Whereas everything within here is, you know, as you can tell from the beginning of the stream, we're talking about like $200 windows, $150 windows. That's in the middle of the range. It's never going to be attractive there. It's always going to be more attractive through an extreme or at an extreme, whether you're looking at an extreme and fading back to the center, or at an extreme and looking for some kind of continuation through. So, but I think that does it, guys. I'm going to wrap it up. I think I covered everything I want to cover. There's really no, you know, sharing alts, it doesn't really make any sense right now. There's nothing that's really standing out as any kind of, not compelled to take any position in alts, maybe besides some short setting up soon. All these trades, by the way, have a really short half-life. There are no shorts right now that I'm looking for that are like high time frame holds or anything like that. Yeah, the market can continue to break down, you know, go much lower. You know, if you take Doge, for example, like this market can potentially go a lot lower, but I don't like to have that kind of mindset with shorts, because one, they could, when they move against you, they move against you much faster than longs move against you, in my opinion. Like it's very easy to get blown out shorting, obviously. Again, you could have the direction right over time, but putting on a position without having something that just continues to do this on the way down is a different case. You know, if you don't have a lucky entry, just expect the market's going to come back to you and test you. Yeah, alts don't seem that attractive. I mean, I think the whole, if you were holding off on Doge because of Elon and integrating with Twitter, I think that's dead. So I think a lot of this is positioning that had realized that, retest of a weekly level. I know a bunch of people, myself included, that were thinking, I want to take advantage of that trade if Elon announces some kind of integration with Doge. You always want to have a little bit of Doge, but at this point, it's I think it's pretty clear that the dude is he's not thinking about cryptocurrency. So, all right, guys, that's it. Gonna wrap it up. Have a great day. I will see you guys again tomorrow morning. Leave a comment on the Twitter link because hopefully you guys are enjoying these. But if there's anything else that I could do during the morning pre-market, during the pre-market streams, I would be more than happy to consider it. So head to this post